Hello everybody, and today is Wednesday, May the 30th, 2012. My name is Michael Wright, and this is the Morning View. Just before proceeding, please do pause the video and read the risk disclaimer. Okay, so let's jump right into the markets. Looking at some trades, we are currently short Aussie yen. We took this short during the U.S. session. We had noted you all what we were looking at before it happened, and it was a break. So we short a half at 77.98 and another half at 78.20. And as of late, we recently moved stops to 78.20 on the full position. If you take the average, it should be 78.09. At the time, was basically looking for a channel break. Okay, so we played that move. We saw the hourly close, and then again that 77.98 was just around this level, and then the 78.20 was an add-on. So, so far so well. Now, how I'm playing this is a move to new lows. That is ideal. If we take a look at the 4-hour developments, what you will see is that the appears to be a five-wave decline so far. I think another low will match deeper divergence. It is that low that I will look to exit most of the position because a sharp rebound will likely be in the cards. Remember, we are still looking at higher levels. That's why I'm not getting too aggressive as of late, but I am respecting this development. At the same time, if you take a look at moving averages, I know we spoke about it during the moving averages webinar yesterday. The MACD is now turning bearish. Prices broke back below that median line, that 50 period SMA, and now the 10 period SMA looks poised to cross over below the 20 period. So still even downside bias looking at moving averages, and then also looking at the Ichimoku cloud. What you will see is that, let's change the color for you guys, that we held below the 4-hour Ichimoku cloud, broke back below the Tenkan and the Kijin, and now we look for the Chiku to get below price action. So as of late, there's nothing to be bullish about just yet, and we will look to move stops to break even sooner than later. Okay, now ideally, if Aussie yen holds, looking ahead, I'm looking for possibly a Kiwi dollar short. I'm looking for a breach of this channel. Until it breaks below, I'm not going to front run it. I will wait for confirmation. A hourly close, I'll put stops right in that channel because only a break back in the channel will negate that move. But then a Kiwi dollar hourly close will support the Aussie yen. So for Kiwi dollar, if it indeed does break below, then I will look for shorts. I'll target new lows as well. We're starting to see some divergence back here. Again, it's very similar to the Aussie yen. A new low will mark deeper divergence, and then we'll caution for a huge turnaround. But again, we have about 200 pips, so um, uh, so just be careful. We can still possibly see an upside towards 76.80, but again, it's that first break below the channel that I'm looking for. All right, and then ideally I'm targeting that 74 area, so a bit 200 pips lower. Something else worth noting is whereas Aussie yen already started breaking down, Kiwi yen has yet to do so. You look at Aussie dollar's breaking down, so it could be the fact that Kiwi dollar's lagging. For Aussie Kiwi could be a potentially a good long as Kiwi plays catch up. Now I would not be playing this Aussie Kiwi, but we did break below this trend line. Now what you want to draw is the fact that most likely is right there. So you're looking at support at 128.40, possibly for the Kiwi dollar. So keep an eye on there for the Aussie Kiwi. But all in all, my focus is going to be Kiwi dollar. I'm looking to take further advantage of a possible risk off move. Also supporting my Aussie yen trade is a potential breakout in the dollar yen. Dollar yen still has a gap to the downside that needs to get filled, and actually is this hourly close. So by the time you guys have the video, dollar yen will have a further will have further details in terms of this breakout. But then you're looking for a gap fill, and then dollar yen. Remember, we talked about this during the weekend webinar that it could have went either up or down lower to possibly 78 before that pop higher. So indeed, if we start breaking below, look for 78. That again supports Aussie yen. Now, with that being said, we talked about dollar Swiss, or we mentioned it via the private Twitter feed and also the chat room. Until this breaks, this still has further upside. I'm not interested in the upside. I'll get interested in the pair on a relief below 96. In either case, if we break below 96, that supports a risk-on move. So therefore, Aussie yen will probably head higher in Kiwi dollar. But as long as we stay above here, then our current view on Aussie yen and the potential view on Kiwi dollar holds true. All right, guys. So a brief view on the markets. Hope you guys get a understanding of the correlation. I'm big on correlations and trying to avoid head fakes. All right, guys. So thank you all for watching the morning view, and good luck trading. If you have any questions, please feel free to Skype us at WrightINV. If you have not added us, please make sure you do add our private Twitter feed, RightFX Access. All right, guys. Thanks again, and good luck trading. Cheers.